Hello, everyone, and welcome to part 2 of our program, Wildfire Devastation and Insurance Fallout, What HOAs Need to Know. My name is Miranda Ward, one of your client relation directors here with Adam Sterling. Today, we will be answering questions submitted by attendees during the webinar portion of our program. As a note, if you do not see your question answered, it was already answered in part 1, or it is too specific and you should seek legal counsel. Now, on to the program. Please welcome back Adrian Adams, Michael Berg, and Terry Guest. What is the minimum insurance coverage / limits by law, not governing documents, but by law?
Well, there's the D&O and the general liability, but I'm not aware on any on fire insurance. Are you guys?
No, there's no law that says you have to insure for this amount when it comes to property insurance. Typically, the CC&R says 100% of replacement cost. Lenders want it to be 100% of replacement cost. That's what you should insure for anyway, but there's no law that says you must.
In California, other states.
In California.
Other states have it, but in California specifically, there's no law regarding property insurance other than crime or fidelity. That's actually technically covered under a lot of property policies, and there is a law about that.
Yeah.
Okay.
Is there a way to legally make an owner install new breakers due to the existing ones having aluminum wiring when the CC&R state the unit owner is responsible for this component? This is now affecting many HOAs and insurance costs.
Yes, there are ways of doing that. And you can, hearings, fines, suspension of privileges, and then ultimately going into court for injunctive relief, getting the court to order them to step aside so repairs, replacements can be made. Terry, do you have an example?
I do have an example, and after you read that out loud, I want to clarify. I mean, we're not electricians here, but aluminum wiring and breakers are two different things. Aluminum wiring is in your walls, and the breaker also in the wall, but the breaker is something different. So those are two very
Yeah, and it's a panel, the breaker panel.
Right, the
With
panel.
individual breakers in them.
Correct. So you have
Right, and it's
panels
the
with breakers
panels.
in them and aluminum wiring in the walls.
Right.
All different things. Talk to an electrician. But I had a couple of communities that had bad panels inside the units. And so clarifying that carriers don't just want common area breakers and panels replaced if they are on the bad list. They also want the ones within the individual units replaced as well. And most governing documents have a provision that says if you do or do not do something that results in an increase in the insurance premium or cancellation of insurance, then that specific unit owner is responsible for that difference in premium or what have you. And so the example I had one community who had their insurance premium quoted, and then they discovered they had the bad panels, and the price went up by I want to say it was like $45,000. And of course, there's always one holdout, right? So they had this one holdout, and the attorney wrote a letter to that individual owner and said, you're going to be responsible for the difference in premium, which is $45,000. You can go ahead and pay that, or you can get your panel replaced. And they complied pretty quickly after that.
Okay,
All right.
Brenda.
We are thinking of removing earthquake insurance and using the allocated funds for building / fire insurance. Should this be put to a vote by members rather than a board decision?
Oh yeah, I recommend it because even though earthquake insurance is optional, once you have it, if you're going to look at getting rid of it, I would want the membership to vote to do that. Because otherwise, as soon as the board votes to eliminate it, there'll be an earthquake, there'll be damage, they'll all get sued. So I would prefer to have the membership vote to drop the earthquake insurance. Have you guys dealt with this issue?
Mike Berg, you're muted.
Yes.
Muting. I'm unmuted. The question of whether it should be put to a vote or not is one thing. If the association has earthquake insurance or doesn't have earthquake insurance, and there is an earthquake, whether it was a vote or wasn't a vote, there's going to be a lawsuit. And so it's really important to just as we mentioned in part one, make sure your D&O policy has coverage for failure to maintain, procure adequate insurance. That's the defense the board's going to get for making that decision, whichever way you go.
Yeah, which is why I'd rather the board not make that decision and have the membership, because it's easier to defend the board.
Yeah.
Okay, next.
Right. Can a property be liened by an unpaid special assessment?
Yes. Next.
All right. What if any what if any is the legal role by BODs of master HOAs in the insurance related matters of sub HOAs?
Is there a role? I'm not aware of one, Mike.
What is the role of legal role of board members of master associations related to matters of sub? The whole point of a sub association is it's operated separately.
Yeah, they have their own insurance.
Yeah, and so the only thing I would recommend or make sure you have is the additional insured endorsements that are necessary if there is crossover for any sort of liability. But the whole purpose of a sub is to be its own entity.
Right. Got its own board, its own insurance, its own everything.
Yeah.
Okay.
What about trading off reducing reserve expenses to pay for higher insurance costs?
Well, I'm not in favor of that. They're going to need those reserve funds for the things that they're being reserved for. And, if it's a temporary in order to get them through a year and then they raise the dues to cover the insurance moving forward, they're still going to need to repay that money back into reserves. So it really isn't any benefit. They should just do an emergency special assessment and then plan on it for the following year.
When I read the words reducing reserve expenses, that equates to deferred maintenance to me, which is all
right.
All bad.
Yeah, I think it might be also important, Terry, you've touched on this before in a couple of other chats that we've had, but it's important to look at the operation of the association as an asset, not an expense.
Right.
It's not an expense to put money in reserves. That is you maintaining your asset for the future.
Right.
Right. What would be the preference for increasing the HOA dues versus a special assessment for a higher insurance premium cost?
Well, it'll be a special assessment the first time you get hit with the higher premiums. But moving forward, you're obligated to budget for operational expenses, and that's going to be a known expense. So you really can't do emergency assessments again for insurance. And also, Mike and Terry, what's the prospect of insurance coming down anytime soon?
Anytime soon?
Let me consult my crystal 8 ball.
Right.
Yeah.
Define in legal terms soon.
In the next decade?
Yes. Yes. In the next decade, we should see some resolution. We are talking about wildfire, but the bigger problem is going to be other things. It's going to be those deferred maintenance issues. It's going to be electrical panels. It's going to plague every community in the country, not just those who are affected by wildfire. Yes, wildfire kicked off our hard market, but carriers are getting very, very particular about their risk, and they're being very proactive to that risk. So I wouldn't anticipate anything going down significantly unless you're a community that's in wildfire, doesn't have the electrical problem or other problems, and we find a resolution to the wildfire crisis in California. Those are the only ones that are really going to see something immediate.
Yeah, you have to look at the things that associations can and can't control, right? If they're controlling their aging infrastructures and working on those and not deferring maintenance and doing all that, then the likelihood of those associations seeing some relief is greater, I think.
No, I agree.
Right. Can we pass a rule that problem trees or excessive vegetation are not allowed in homeowner backyards or personal yards? Some people already have those trees. I believe when they say those trees, they're talking about the palm trees and some of the other trees you guys were talking about.
Pine trees and
Sort of a
eucalyptus.
retroactive rule. and make them
Right.
be removed?
Yes, they can. The difficulty is going to be enforcing. You'll get some voluntary compliance, and then you'll have to lean on owners. But this is where the fire department can also come in handy, and they can cite owners who have unsafe fire conditions. So you want to get the fire department involved. And I don't know on the insurance side, could that be something you guys would be involved in?
Involved in no. The reason that we would recommend it though is if that tree poses a threat to the HOA structure or the HOA property, then you can be compelled easier to have to remove the tree, because that's part of risk management, is avoiding a loss. And if this tree is going to fall on a building, we need to get rid of the tree.
Yeah, and not only that, but if it's going to cause a structure fire and then that sets off a chain reaction like happened in Palisades, the association is going to, regardless of insurance situation, want to minimize the risk of fire in the community. And that's where they could specify. One of the associations I'm working with now is eliminating old palm trees in the community and looking at eliminating eucalyptus trees because they burn really hot.
And oily.
Yes. Okay.
Presently, our town does not permit concrete siding, and we are expected to replace siding or replace aging siding with wood. How do we resolve this?
The town doesn't allow it?
What it said.
Yeah, that's surprising.
Well, and when we talk about concrete siding, are we talking about stucco? Or are we actually talking about a concrete wall?
Yeah, because I'm not aware of any concrete siding.
Yeah.
I mean, there are different other materials that are flame resistant or flame retardant, flame proof, that just don't burn. So a lot of other materials available, but I can't imagine the town would prohibit them.
And if it is, and I'm going to lean on or pretend to be Adrian for a second, that would be something you have to take up with the town.
Right.
That's crazy. I've never heard of that. That's crazy.
We're
in a massive wildfire area. We're worried about wildfires. Let's put wood on a wall.
Right. Highly flammable. Okay.
If our reserves are at 100%, do we need property insurance?
Yes.
Yes.
Absolutely. Because your reserves are not going to be sufficient to rebuild the structures. They're for major components, and you're required per your CC&Rs to carry insurance, and it would be insane not to.
Yep.
If insurance cost requires more than 20% increase, how can you put the whole thing in a budget, or does emergency become part of passing for calculating the 20%?
That's a good question. Because you are limited to 20%. It's the association on its own without a vote of the membership can only do a 20% increase on the budget. So if there is a missing amount, if there's another 5% that's needed, special assessment, and then the next year you'll be able to again cover it with up to 20% increase. So you may have to fill the gap there with a special assessment.
Why doesn't the insurance commissioner put a moratorium on cancellations that don't apply to condo associations?
Probably should have rewritten this because it reads a little funky. I think they're asking, the insurance commissioner did put a moratorium on cancellations of insurance in fire affected areas and zip codes. And I think this
Or
person's
individuals
asking,
or
I think that's what the question is. The question
general.
is, how come that didn't apply to condominium associations?
It did.
And I was like, it did. I'm looking
Yeah.
at Michael Berg going, didn't it? It did.
Yeah, it did.
Okay.
There are carriers, and it's important to keep in mind what Terry said, fire affected areas. It's not areas that the carrier is worried about in the future, or mapped or marked, or locations that are mapped as high wildfire zones. This is fire effect. You have to have been affected by the recent fires, and the carrier can't cancel. He said for a year. I believe State Farm said we're not going to do it for 2 years.
Yeah.
But that mandate was put in place.
The fire affected area and your structure survived? Is that the?
Sadly, I don't have the answer to that question,
Yeah.
but if you were affected by the fire, when we had it in the last wildfires, 2017, 2018,
Right.
they said any zip code that abutted the fire zone. So
Okay.
if I'm in this zip code and the fire was here and our zip codes, touched, then anybody in that zip code couldn't be canceled.
Okay.
So I'm not going to make an assumption out loud.
All right.
Why is an E&S option a better choice for an HOA than going with California Fair Plan?
Go ahead,
I
Sarah.
don't know what that is.
E&S means excess and surplus lines. So those are the
Oh.
non-admitted carriers
Right.
in the state of California. So why is it a better choice? Because the California Fair Plan is horrible coverage. Horrible coverage. The only thing the California Fair Plan covers is fire. That's it. It's not going to cover liability issues. It's not going to cover water losses. It's not going to cover a myriad of other things that regular other policies, admitted and non-admitted policies, would cover. In fact, when you get a fair plan policy, you have to have, they call it a wrap policy. So it's another property policy that kind of wraps around the fair plan policy and covers all the stuff that the California Fair Plan doesn't. Is Fair Plan less expensive? No, it's not less expensive. It's super expensive. It doesn't cover what you need. So E&S is excess and surplus lines are often way better choices and sometimes less expensive as well. So if you're working with an insurance professional that goes straight to the fair plan and doesn't investigate other options, you might want to try a different insurance professional.
The other thing about the fair plan is it's not eligible. The community associations are not eligible for the fair plan in the vast majority of cases.
Right.
The total available property insurance through the fair plan has been increased to $20 million, but that is per location. Per location, according to their definition today, it's being worked on, but according to their definition today, per location is the entire community. So if you have a $50 million community, that is replacement cost, property values, property insurance replacement costs, you're not eligible for the fair plan. And I've seen some carriers, or I've seen some brokers write up to the policy limit and then try to write a policy over the top of the fair plan, which brings in a whole different group of problems because of what we call coinsurance. And the fair plan has a coinsurance clause of 80%. If you're not insured to 80%, you're going to get smacked if there's a loss. That is changing. The goal, the things that are changing now specifically are the definition of location to be changed to a building and the cap on the total policy limit or the total coverage for an association to be moved to $100 million. Is the fair plan going to be viable at that? Are they going to, because right now they're talking about surcharges to everybody in the who had a policy in California. So I'm not sure if they're going to be financially sustainable, but that's what's trying to get done.
There's also pending legislation. There was a legislation that was introduced to require insurance professionals to look for other options before renewing with the fair plan. So hopefully it passes.
Right. Is travelers leaving California? I have 2 associations being non-renewed with 0 claims and over 10 years on both.
I don't think Travelers is leaving the state. I think Travelers is doing something similar to what Farmers Insurance did a couple of years ago, which is either going into a full moratorium or really limiting the types of policies, the types of accounts that they're going to write. I know recently QVE left California, but not travelers. Do you have any experience, Terry, on travelers? Yeah.
No, not leaving the state. Eligibility requirements are definitely, I mean, most carriers are tightening up on those, and that might be why your association got canceled, even though they don't have any claims. So, and the two most common reasons, like for eligibility to be tightening up, the two most common reasons I think for cancellations to happen is aging infrastructure or the total insured value. So if either of those things fall outside, or the age of the building, if either of those fall outside the new eligibility guidelines by a carrier, then it doesn't matter if you've been the perfect client for decades, you're out. Sorry.
What does non-admitted mean? If the carrier can write in the state.
Non-admitted non-admitted means that a carrier has not paid licensing fees to the state of California and is not governed by the state on how they set their rates, what coverage they offer, how much coverage they offer. It does not mean non-regulated. I point you to sla.org, surpluslinesassociation.org. And there you can find information on what surplus lines carriers are and how they are vetted by the Department of Insurance. They land on a list of approved surplus lines insurers, or the lastly. And so they are admitted to other states. They're just not, they're operating in a non-admitted status in California because they want the flexibility of rate setting and how much risk they accept. If you are admitted, the state says, here's what you can charge, and we need you to write X amount of millions of dollars in this place and that place. But the only real difference between admitted and non-admitted, other than their financial status, is that an admitted carrier in California has access to the California Insurance Guarantee Association. If an admitted carrier is insolvent and needs to pay a claim, the California Insurance Guarantee Association, CIGA, we love our acronyms, will provide $500,000, up to $500,000 to that policyholder. For an association, that's 10, 15, 20, $100 million. $500,000 isn't a lot of money. So I would look more to that rating of that carrier. Go to ambest.com and check out the financial security and strength of that carrier. Anything A-rated, it's like a letter grade, you're awesome, and then there's a Roman numeral grade for how much liquid assets the carrier has strictly to pay claims. Anything on the high ends of those scales is going to be a strong carrier, whether they're admitted or not admitted.
Curious if the Fair Plan is on that list.
I don't know, actually.
Where they would show up.
Sounds like a little research project.
Maybe.
All right. Which D&O carriers still offer failure to procure insurance coverage?
I know the policy from Farmers Insurance still does. I know the Travelers policy still does. The accredited surety policy does. The distinguished, how do we access the distinguished programs is our access point to their carrier. Oh, Great American. Great American still does. The one
as of today, right now, while we're recording this.
Right. While we are talking today
Right.
at 11:28 a.m. on March 12th, 2025, all of this is true. But I believe Philadelphia Insurance removed their exclusion. So, or they added their exclusion.
If you change the CC&Rs to not require full coverage, would homeowners still be able to get home loans?
They might not.
Well,
Have you guys experienced anything along those lines?
so the question is, if you change the CC&Rs to not require it, that doesn't mean you're actually not getting it. that
Right.
means you're changing the CC&Rs to not require it, so that if you can't get it, then your board isn't in trouble. That's how I'm reading the question. So if the
Right.
CC&Rs say what the CC&Rs say in your home loans are two separate things. If you don't have full coverage, you will have trouble getting home loans. But if you want your out provision in your CC&Rs, you can consult with legal counsel.
Right. I agree.
Is there a requirement to notify a mortgagee that insurance changed to underinsured? Any recourse to mortgagors calling loan due if becomes underinsured?
Well, I'm
With
not
single
aware of the
family homes,
association, being required. It seems to me between the homeowner and the lender.
Yeah, and this is one of the reasons why the lender asks for proof of insurance every year.
Mm-hmm.
Because you get a certificate that shows the coverage. Historically, lenders have pretty much just filed that away. Now they're looking at it because they're seeing this and they're raising red flags. But yeah, I don't know that there's a requirement. There is something in a single family home policy that adds, and I don't sell this stuff anymore, so I forget what they look like. But that adds a note that the lender will be notified if there is a significant change in the coverage. But by and large, most of us brokers that handle HOAs don't actually put the lender on the HOA policy to provide that proof of insurance, because it's not the homeowner's policy individually. And you can imagine if something happens just randomly and innocently, and there's like an assessment or a premium, a bill that's missed, and the insurance carrier issues a notice of cancellation, and that goes to all of the members of the community, there's a riot. And all it was something crossed in the mail. So we don't want that situation. So most of the time, it's not. This is wait for the lender to figure it out.
Yeah, the only thing the association is required to disclose is to the membership, each year, the insurance.
Yeah.
Okay.
how important is access? Homeowners getting out versus first responders getting in when carriers consider coverage?
That's a good question. Right now, it's not a consideration. It might be as we evolve into the new kind of phase of what insurance is going to look like when it comes to the planning for a natural disaster. I think it's less important to figure it out or consider it based on what a carrier might view, and more importantly, what's right for your community and what keeps your community safe.
Right.
I think rather than looking at this from the negative side, look at it as the positive side. If your community does create a emergency action plan with an evacuation plan, and you give that to your insurance professional, and the insurance professional gives it to the carrier, that's definitely going to work in your favor. Are they going to ask for it, and is it going to work against you if you don't have one? I don't think so, but it can definitely make you more insurable if you do.
Great point.
Can you speak about the fire score?
Yeah, Chicago Fire won 1-0 yesterday. No, I'm kidding. I think we're talking about what this is when we were talking about fire score, risk meter scores, how carriers view the location. And in risk meter, which is a core logic program, it's a scale of 1 to 100, and anything pretty much over 30 is where most carriers are saying, I don't want anything of this. Even under that, I've seen risks with preferred carriers that risk meter maps as a 6 out of 100, and the carrier says, nope, I don't want it. So it's relatively subjective. I mean, it's very much a 30,000 foot view of an area, and I kind of akin it to when the National Flood Insurance Program, when FEMA set up the National Flood Insurance Program, and they viewed aerial photos. And they said, okay, this area is susceptible to a flood, and therefore that area requires flood insurance. Well, that was very broad scope. And now we have the technology to kind of bring that back to draw those lines a little finer. So we saw in 2009, for example, we saw a massive remapping of most of those areas because we were able to draw more specific maps. I think we'll see that type of thing as we evolve in the fire conversation, the wildfire conversation, where we have more understanding of fuels and fire management, where we'll be able to use predictive modeling and a lot of the technology that is out there that insurance companies aren't allowed to use right now. The hard part about fire is I can tell you where water is going to flow. I can't tell you where fire is going to burn.
Yeah.
Yeah, and there is a website called riskfactor.com, and you can put in your address of your home, and it'll give you the risk level for wind, fire, flood. And I don't know who puts this on, and I don't know if you guys are familiar with it, but it may be something of curiosity where all homeowners might want to put it in, just see what they find.
Mm-hmm.
Your broker agent or broker should be able to also provide you with some type of data on your property, whether that's super high level or whether that's very specific to your home. Would depend on the capability or the access points of the broker, but we all have our own ways.
Will changing decking materials to steel and composite decking help?
Help what?
Help.
Well,
Right.
it'll help resist
Help you not burn?
fires.
Yep.
Yeah, because I know in the Woolsey fire, palm fronds dropping onto decks that caught fire, and then the fire would be sucked into the units from the decks. It certainly would make a difference if the fire hardened their decks and balconies.
And any hardening efforts that are communicated to the insurance carriers are again going to help you look more insurable. Will it bring down your rates and get you discounts? At this time, as of right now, probably not, but it'll make you look like a better risk. It will make you a better risk and it will make your home safer. So yeah, it'll help.
Yeah, it's interesting. I've got a house in the mountains and pine trees all over. I removed all the pine trees off my lot and I put in metal roofing. And when we renewed insurance, they actually sent somebody out there to look at and photograph my house, the property, before they would give us the insurance.
This website, by the way, is relatively cool. It's firststreet.org. Risk, whatever you said, told me.
Risk meter?
No,
Yeah,
whatever
risk
Adrian.
factor.
Risk factor.
Riskfactor.com.
Yeah, riskfactor.com pointed me to firststreet.org equals risk factor. I think it's probably the same product. It is paid. It is a paid service. So you have a free trial. You can probably sneak your own property in through your 7-day free trial and then cancel it. But it's pretty slick.
Cool.
Check it out.
Does Berg Insurance or LaBarre Oksnee Insurance currently have a market for a Condo Master Policy with replacement cost?
Yes.
And it's LaBarre, isn't it?
That is
Oksnee?
correct. It's
Right.
LaBarre Oksnee.
LaBarre.
And LaBarre. Yeah, there's plenty of products out there that offer replacement cost, that offer extended replacement cost. There's even one that offers guaranteed replacement cost. It's just a matter of qualifying for that carrier based on their appetite.
Question to broker. Are some associations shifting the cost for interior unit property exposures like cabinets, bathroom fixtures, etc., to the unit owner to cover via their H&O policy, adding a building limit for those fixtures?
Yes.
Yes. Bare walls coverage. Owners are required to cover all of the improvements inside, and their HO6 policies cover that, right?
Absolutely, 100%. CC&R revisions may be required. Those are long,
Right.
tedious, and pretty much acts of God. But In the meantime, while you work on that, I would recommend a higher deductible, property deductible, because the higher deductible will protect the insurability of the community. Take your deductible from $10,000 to $25,000 or even $50,000. And that really puts a burden on, and I use burden because it requires the unit owner to make changes to their own policy.
Right.
But it doesn't force a revision of the CC&R unless the CC&R has some provision that says you can't have a deductible this high.
Mm-hmm.
Yeah. And I can tell you, we're doing a lot of restatements, CC&R restatements, and we do address that issue.
Mm-hmm.
So boards do have the flexibility of doing bare wall coverage.
Yeah, CC&R should be restated anyway.
Right.
I mean, the CC&Rs that are written in the 70s and 80s that are like 12 pages long, there's a lot that's changed since.
Right.
I mean, I was born in the 70s. Look at me now.
Does my master policy insurance company have to disclose their wildfire rating on our risk?
No, not right now. If the insurance company wants to use the wildfire risk as a factor in your rate, then yes, they do, and they have to offer you an opportunity to rebut that.
Appeal it.
Or appeal that, yes.
Mm-hmm.
But if they're not using the factor in their rating, then they don't have to do it. And so what are carriers doing? Instead of releasing the factor, they're not writing the policy at all. I had a conversation with the board yesterday. Today's Wednesday. Yeah, yesterday. And they were saying, well, I want to know why because their coverage was being non-renewed because the carrier was saying, I don't want to write in this area anymore. And, well, we want to know why. And I said, you're not going to find out because the carrier doesn't have to tell you what. They told you. They don't like the location. They're worried about wildfire exposure. Yes, but what did they use? What information did they use? It really doesn't matter. They're not writing you, so they don't have to tell you anything. Boy, that was a candid answer.
Would prohibiting the burning of wood in fireplaces affect rates?
Yes. Wood burning fireplaces cost money in premium.
And that's been true for decades.
That hasn't changed. Yeah.
Right. Because you've got an open flame, you've got coals, and also the pollution side of it. They've been cracking down on trying to get rid of wood burning fireplaces and stoves.
Yeah.
Pellet stoves too. Mm-hmm.
Yes.
All right. I have been looking into a company that provides highly rated and approved products to keep embers from entering into attics and basements. Can HOAs get an insurance discount if a percentage of the homes and/or their administrative buildings have this additional fire protection?
Terry?
I'm going to go with, are they going to get a discount? No.
No.
Because discounts are not really a thing anymore. However, that will play into if your community is trying to get a FireWise certification, or if your individual building or home is getting the safer from wildfire. It's called something different from the insurance. There's another term. I will look it up. Getting certifications will help you keep your insurance costs down. Having that stuff in place is going to make you more insurable and make your community safer, which is the end goal. It used to be like a checkbox. If you have fire sprinklers, you get a 10% discount. Check here. That is not one of those check boxes.
So now it's an issue of whether they can get the insurance at all.
Right.
Correct.
Okay.
Cost is out the window.
Yeah.
What entity determines
home safety? That's IBHS, that certification. Wildfire prepared home.
What entity determines the fire risk levels for communities? We were told recently that there is no universal basis for this determination. Why not have the fire departments determine a universally applied fire zone paradigm?
What you were told is correct. There is no universal state or universal basis. Carriers, like we just mentioned, the risk meter stuff, and Adrian was talking about the risk score. Carriers use A number of different things. There's a number of different rating platforms, modeling platforms. We're still not to a place where we can use predictive modeling. We're still using historic modeling, so we're kind of behind the times in that, not taking advantage of the technology. Why don't we have the fire departments determine it? We can. Fire departments will happily determine whether a property is in a risk. CAL FIRE has a bunch of maps that show where they map the fire zones. The question isn't whether we have the capability. The question is the carrier going to care? Is the carrier going to say, okay, that's the zone, I agree with you, I will accept the exposure? Right now, carriers are very hesitant to do that. We have, like I said, we have the capability. It's just whether the carrier wants to write that risk or not. And if they don't want to write it, it doesn't matter what the capabilities are.
Yeah, if you go on the CAL FIRE's website, you can see a map of California that shows all the very high risk fire risk areas, and they're color coded. So red to orange to yellow, and you can see if you're in one of those high risk areas.
Yeah, it's a very colorful map.
It is.
I wonder if, this is Terry wondering, so now we have flood zone maps, right? And if you're in certain zones for flood, you're required to have flood insurance. If we ever get a wildfire definition, could we move to something similar for wildfire? If you're in this particular zone, you're required to have wildfire insurance, and that kind of seems like it would level everything out.
Yeah, that was one of my initial thoughts 2 or 3 years ago was, hey, can we get an NFIP style thing?
Right.
I don't know. Yeah, maybe.
So it looks like what's happening now is if you're defined in a very high fire risk zone, insurance won't insure you.
Right.
That's correct. Yeah. Or it's going to be really expensive. Admitted carriers won't insure you.
Right.
This is for PD units. Underwriter is forcing the HOA to inspect electrical panels and have the panels replaced per each unit. They are the federal Pacific panels. The HOA is not responsible for the individual unit electrical. Is this legal?
When we say PD, are we talking about PUD, like single family homes?
Planned developments?
Or planned developments in general? We're not talking about condos. Our understanding here.
I mean, I've seen some condos that are and townhomes that are written as a PUD, but they're
right. It's just the insurance responsibility, and the CC&R says we have to buy insurance for that structure.
And I don't know if the law requires them, but certainly if they want to get insurance, they need to do it.
Yeah.
So that means changing out all of the common area panels and then leaning on all the owners to change out their panels.
Yep. Just like Terry's example from earlier. You had, sure, the association can do it. The unit owner is responsible for it. And if they don't want to do it, that's fine. We're going to charge you for it. You're going to make you pay the additional premium. The answer to that question, in my mind, would be, is it legal? Straightforward. Yes, it's legal, because the insurance company can say, I don't want that risk if you don't look like this.
Right.
How do we convince an insurance broker to do a site visit? We have an old building, but it was built to be fireproof, but the carrier only looks at the date of construction and not how the building was constructed.
Convincing a broker to do a site visit should be a very simple thing. It should be, we work on commission. That's the elephant in the room. And if I say, no, I don't want to visit your property, how likely are you to use me? No. Right. I'm going to go out. Terry's going to go out. We do it all the time. We're going to go out and we're going to inspect things. We're going to take pictures. We're going to do everything we can to represent your risk to an insurance company that's going to give you the best rate. The insurance carrier most likely, right up off the top, says, when was it constructed? And how was it constructed? Right? And they put you in a bucket based on their underwriting appetite. And so if we really want that account to be with that carrier, we need to go out and we need to show the carrier what they're missing. And so it moves you into a different bucket. If you have an insurance broker that says, no, I'm not going to go inspect your property and help you, find a new one.
Right.
That said, Mike and I are not specialists in building construction, and most brokers are not. So yes, we absolutely shouldn't say no if you're asking for an inspection, but also if you have some sort of report from an expert that shows that has the background data to support what you're saying, that's going to be way better than us taking a trip out there too. So
Yeah, I'll usually invite a friend of mine who's a general contractor to come out for stuff like that. We do it free of charge, just because that's the right thing to do. And if we get to work with you, then great. That's why we did it. But a GC is a really good resource for, for a lot of this stuff, because like Terry said, I'm not a contractor. Sure, I've built things in my backyard, but I wouldn't have lived in them.
HOAs are responsible for HOA insurance. Homeowners are responsible for HO6 insurance. If a homeowner does not have proper insurance, does this potentially put at risk for the HOA to lose its coverage if discovered by their insurance? And there's a second part. How does the board enforce homeowners to ensure all homeowners have HO6 policies?
Go ahead, Terry.
So homeowners are only required to have their own insurance if their lender is requiring it, or the CC&Rs require it. But a lot of times the CC&Rs don't require it. So the homeowner association's carrier is not going to decline or cancel coverage based on those individual owners having insurance or not. Those don't really have anything to do with each other. I used to be a manager, and I for sure did not want to be responsible for collecting insurance information on every owner in all of the units managed. That's a beast that I don't want to get involved in. I think it's great that the management and the insurance professional for the association communicate to the membership to explain the importance of having individual homeowners insurance, because not to throw real estate agents under a bus, but a lot of real estate agents just say, oh, the HOA covers everything. You don't need insurance, or, it's fine.
Yeah.
It's better to be transparent and explain what the association's insurance covers and doesn't, and encourage the correct type of insurance that each individual owner should have, including coverage for their personal property, the stuff they take with them when they move. If the HOA has bare walls coverage, then the owner needs to cover the interiors of the property. Liability insurance is important. There's something else that's important, but we're going to get into it in a different question. So loss assessment coverage is important.
When we restate CC&Rs, we have in it the requirement that each owner carry insurance, insure everything. But we specifically put in that the association may, but is not required to enforce it, to deal with it. Because here's the problem. If you have in there that everyone's required to have insurance, well, boards are required to enforce the CC&Rs.
Right.
There's always going to be somebody that doesn't have insurance. Usually there's going to be a flood, and the owner that caused the flood doesn't have any insurance. And then the owner down below is going to want to sue the association for not having enforced the provision requiring the owner above to have insurance. So it's better to say, yes, every owner is required to have insurance, but the association is not required to enforce this provision. So then when the owner is uninsured and there's a loss, he's in breach of the CC&Rs.
Right.
And so you can deal with it. It's just a much better way to deal with this issue of owners, requiring owners to have insurance. Because as Terry pointed out, it's an administrative nightmare to try and make everybody turn over their policies, because a lot of them are just not going to do it.
Right.
Or they'll do it and then cancel the next day.
So there is a means of being informed if you are required to maintain this impossible list and enforce the owners getting their own insurance policy. The HOA can be named as an additional interest on the HO6 policy. That is, the owner can call their agent or broker and say, I need the HOA to be named as additional interest on my homeowner's policy so that the HOA gets informed if a policy goes out of force. It's not an additional insured. It is just for informational purposes. So the association stays in the loop. I have one community in Orange County that requires this, and they did it because of a number of other reasons, but they require the association to maintain that list. And so they have everybody name the association as additional interest. If the policy goes out of force, they just have a record that says your policy, you didn't give me your renewal policy. Why didn't you? Oh, I don't have it anymore. Okay, well now you're in breach of the CC&R, and we're going to fine you X amount of dollars until you get new insurance. But there is a way to do it, but like Adrian said, I'm not a big proponent for it because it puts the association at risk.
Right.
The HOA is nowhere near a fire zone. Should we expect a premium increase even though we have no concern with fire?
Yes. The market for insurance is changing. Carriers are changing. Carriers are looking at their rates. The market for insurance has been underinsured from a premium perspective for a long, long time. And I know that's hard to wrap our heads around. But it has been, and we need to recover from it. And it's part of the reason why this hard market is as difficult as it is. And no concern for fire, no concern for wildfire. We all have, make sure we all understand it. I have a concern for a kitchen fire. So you can certainly expect an increase. What that increase is going to depend on all the factors from your own carrier. And it's going to be different for everybody.
Mm-hmm. When you say 100% coverage, do you mean replacement cost? I am looking at a policy with 80% coinsurance but has no replacement cost.
It has replacement.
But has replacement cost.
Or has replacement cost.
Go ahead, Terry. Unless you want me to.
I was going to pass this one to you.
Oh, okay. When we say 100%, yes, we're talking about the replacement cost of the building. The structure should be insured for 100% of the replacement cost. If you have a policy that has a coinsurance provision in it, it means the carrier is allowing you to purchase less than 100%, and they will still provide you with the total cost of repairs. They won't. There's a calculation for it, but they won't withhold any of the claim payment if you're up to that amount. What your carrier is saying now is, yeah, we have that coinsurance cost, but we have you insured to 100%, so we don't really, that's not even a factor.
It's a very confusing way to say you're fine.
Yeah, you're good to go.
Okay.
Sorry. I'm verbose. What do you want?
No, I meant the policy wording.
Oh, yeah.
Is a very, very confusing way to say you're fine.
Okay, I'm not verbose.
All right. Can you touch on self-insuring? Should this even be considered? We got a lot of questions about self-insuring.
I would say no. However, I was talking with a manager of an association in a different state, and they do self-insure because it's a marina association, and they have been totally unable to find any insurance at all. Just not able to find it. So they came up with a very creative self-insurance plan that is working perfectly for them. Of course, this is for a marina association, so you're talking about docks and things. You're not talking about homes that need loans and all that.
Right.
So I would say for a condominium association, no. For an association that has only common area, still not a great idea, but easier to manage. You're not going to negatively affect your membership if you self-insure. Because again, back to the very first question, there is no law that says that you are required to have property insurance in California. Yeah, and let's clarify self-insurance versus choosing to be uninsured.
True. Self-insurance, there's a whole process. Yeah. You have to show that you have financials, money in the bank, the ability to fund that. In order to self-insure. A lot of large corporations self-insure for large deductibles on, whatever product or property that they need to insure. most shipping companies, most delivery companies like UPS and FedEx, they self-insure up to millions of dollars for their auto liability policies. But they have done the process of self-insuring versus I'm not going to carry insurance, and if anything happens, I'm just going to accept it and pay for it. Like, those are very different concepts.
Yeah, and you know what? It's also going to depend on what it is. If the association, the only thing they have is a monument at the entrance of the community.
Yeah.
Okay.
Right.
But if we're talking about $50 million of replacement of buildings,
Right.
and if you can't get insurance, you're basically self-insuring. But to voluntarily do it, you're then going to be in breach of your CC&Rs unless your CC&Rs allow for it.
Yeah. Keep in mind that insurance is a piece of a risk management program. You don't have to use insurance to cover a loss. Like, you don't have to use insurance on your auto to cover the scrape from a runaway basket, in a shopping center parking lot. But you have to avoid risk. You have to control risk. You can transfer risk. That's insurance, sending it to somebody else. And sometimes you just have to accept it. You get to choose what you want to accept. My recommendation, and this is not coming from the salesman, but my recommendation is you transfer everything you can because it makes sense. It makes sense to give a $50 million exposure to an insurance company and pay, let's say, $50,000 in premium annually than it does to try to come up with $50 million. It's just logical. Let somebody else take on that exposure for you.
Right. Plus your CC&Rs may not allow you to do that.
Plus you may not be able to do it anyway, so.
Right.
GoFundMe is not an insurance plan.
No.
I bet people have tried that before. All right, guys, just to let you know, it's 12 o'clock. We have about a half page of questions left to go through. Do we want to call it? Are you guys good, or can we keep going through them?
I think the rest of them are probably shorter answers, and we can probably keep our answers shorter.
Yeah,
quick ones.
Just wanted to check. All right. Do you recommend that HOA homeowners take out loss assessment insurance that will help them meet their financial responsibilities if there is a fire loss?
Go ahead, Terry.
If there is any loss, yes.
Right.
There's loss assessment is part of a individual personalized homeowners policy. And that will help you pay a special assessment if there's a special assessment for an insurance-related loss. That's going to help pay your portion of it. So should you have it? Yes. Should you max it out, get the maximum that your personal policy allows? Absolutely, because it's not really that expensive. So do that.
Yeah, and the maximum is typically $100,000.
Yeah.
When Michael mentioned in part 1 to plan on a 25% increase, was he talking just about wildfire or total insurance coverage?
To be safe, I'm going to say total insurance. I'm talking about property insurance. It's going to be, and that's me being high level conservative. Things will be different for everybody. But carriers have advised us, if you want to tell somebody something, tell them 25%. I don't like doing that because the first thing a board of directors does is say, well, let's go find out what everybody else says. But it's just the truth. And I'd rather you hear the truth and then get something that's better than me say, you know what, I'm only going to say 5 to 10, and then me drop a 25% increase on you and then you get angry. So certainly in wildfire prone areas, though most of the communities at this point have already been impacted with the big hit in premium that you're going to get. Because we've already kind of said everybody's there. I wouldn't anticipate that kind of a jump wildfire wise, but yeah, there will be an increase, and 25% is just a safe place. I tried to keep that shorter.
Premium?
Yeah, I was going to commend you on the short answer.
With premiums and lack of carrier availability rising, Do you anticipate that associations will need to consider extremely high deductible plans? And if so, should the association consider adding an operating or reserve line item specifically earmarked to cover the new deductible limit?
I
Yeah.
would say a lot of carriers are not even giving you a choice on what your deductible is. They're just
Yeah.
saying, here's what we'll give you. And I mean, in the past, we could say, oh, we could adjust our deductible to adjust our premium. Many carriers now, especially the E&S carriers, are like, you'll take a $25,000 deductible and you'll like it. I've seen deductibles as high as $1 million, honestly.
Mhm.
So can you put that in your budget as a line item? Totally not an accounting person. I have seen it done. I've seen differing opinions on whether that should be done.
I don't,
Yeah. Well,
I don't know that you can, Adrian, I don't know that you can reserve for a
yeah,
deductible in
No.
I
California.
can address that.
Yeah.
First of all, you're going to be self-insuring for the deductible, so you do need to set aside the monies for it. And I've talked to reserve analysts, the reserve companies. Technically, it's not a reserve item, and that's not where it should go. But some of the reserve companies, analysts, are allowing for it. Because if you park it in your operational, you're not supposed to have excess money at the end of the year. And there may be tax implications. But if you put it into the reserves, it seems to be a much better place to park the money, and it's got a zero life to it. So it's just there, and if you need it for a deductible, then you pull it out.
Yeah.
I'm going to say the worst possible thing. You could have a deductible more than one time in a year.
Yeah.
Just saying.
You could have
Okay.
more than one loss.
Yeah, that's true.
What about the legislation that requires there is nothing combustible within 5 feet of a structure? Can you be more explicit about the 5-foot rule signed by the governor? Also, is hardening the structure considered emergency and or mandatory?
5-foot clearance is 5-foot clearance.
Right.
I haven't read the whole thing on, is it vegetation that is X amount of inches tall? Is it mulch? Do you want concrete all the way up, like a walkway that covers 5 feet? I think you're talking about just making sure that there is 5 feet of what we would call defensible space between your building and whatever's next. 5 feet isn't far.
Right. And if you've got shrubs right up against the house and branches from trees overhanging the house or overhanging the condominium structures or a clubhouse, you're not going to be very defensible. If that catches fire, it's going to transfer to the structure.
Yep.
And that doesn't matter whether it's a wildfire or not. We're just talking flames,
Right.
right?
Right.
The 5-foot rule signed by the governor, I think has very specific areas that it applies to. So it has to do with what your wildfire score is and all of that. Is it a good idea anyway? Yeah, of course
Yeah.
it is. And you can check the Firewise community website or
Right.
check with your local fire safe council on and your county code too. Your county code might have requirements with
Just go online. You'll find information about it.
Is it considered an emergency or mandatory? It might be if that's the only way you can get insurance.
Okay.
Isn't CLAC working on a bill to help boards avoid liability in the event they can't purchase the insurance coverage that their CC&Rs require?
Yeah, they were exploring it and they needed a sponsor and they couldn't get one, so it didn't go anywhere.
Still trying, have not given up
Yeah,
the good fight.
haven't given up the ghost, but still trying.
You mentioned 2 ways that owners can potentially get individual savings even if the community can't. Firewise community and something else. What was that something else with the long acronym?
It's the one that I looked up. I have to look it up again. It is being declared a wildfire safe home or wildfire prepared home by the Insurance Institute of Business and Home Safety, IBHS. and it's wildfireprepared.org. That program right now is for individual single-family homes. They are rolling out a program for communities. We haven't seen the rollout yet, although one community I work with was asked to be a part of the pilot program.
Yeah, and you should do it anyway, harden your homes, even if you can't get a reduction on your insurance.
Right. The Department of Insurance, the insurance commissioner, is requiring homes with these designations to receive discounts if their insurance carrier is an admitted carrier in the state of California that uses these sorts of rates in developing their premiums. So could you get a discount? Yes, you could.
Our electrical panels were not put on our reserve study. Should they have been?
That's a really interesting question, because it's becoming something that we need to reserve for. We were never planning to reserve for electrical components. I'm having a conversation with association reserves and a number of other reserve analysts, reserve specialists, to talk about how to implement that for the future, because they were never part of the study, because we never predicted that we would be having this conversation. And you realize now, that insurance companies are looking at 30 years, a 30-year-old community is now considered old. And to put that in perspective, 30 years, Marty McFly went from 1985 to 1955, and we thought that was a time warp. If I go from 2025 back 30 years, I'm going to 1995, which is the year I should have graduated from college. And that's not that long ago, at least in my mind. So this is brand new, but the panels, yeah, I'm not sure about shouldn't they have been then, but they certainly should be now.
Yeah, it used to be that 30 years was the cutoff point for putting components in a reserve study.
Yeah.
The standards have changed, and now you see companies putting in components that have a 50-year life. And you're not necessarily reserving for it now, or maybe you're putting a very small amount in, but at least you're recognizing that those components exist and looking at the life of those. So
I talked to a couple reserve analysts that are encouraging reserving for inspections of those aging components. So the electrical, the plumbing, those, just like you reserve for a roof inspection, they're adding in those other aging infrastructure components as well.
All right. Please explain the concept of broker of record when seeking competitive quotes.
Go, Mike.
I'm so excited that somebody asked this question.
Yeah.
The broker of record is exactly that. That is the broker that is representing you, the insured, in the marketplace. In order for you to get competitive quotes, competitive options, you can go to multiple brokers. If I approach an insurance carrier on your behalf, I am the broker of record according to that insurance carrier. Another broker cannot access that insurance carrier because they are not the broker of record. But if they go to a different insurance carrier that I haven't, they are the broker of record for that carrier. What happens in our market space is we as brokers are going to as many carriers as we can, and then the insured, the association, typically through their management company, is saying, well, I want to see 3 quotes, 3 bids. And so I want you to go to 2 other brokers. Well, those 2 other brokers are going to the same carriers, and they're going to be blocked by a prior submission from the initial broker of record. These other brokers may say to the HOA, sure, I can shop for you. I need you to sign this piece of paper naming me the broker of record. What you need to keep in mind is that did not open up more options for you. It actually narrowed them to 1 broker, because you just told everybody in the marketplace, we only want to work with this broker. If I can access a carrier that hasn't been accessed before, I don't need a broker of record letter. It's I am the broker of record. The only reason to use a broker of record in the shopping of insurance is to make sure that only one broker is working for you. So rather than, say, go to 3 different brokers and let them step on each other's feet, go to the one that you are most comfortable with and ask that broker for a market list when delivering the proposal. Ask them for a list of the carriers that they approached or were approached on the association's behalf, because we don't really go directly to a lot of carriers. We actually go through another marketplace. It's called the wholesale broker marketplace. But ask your broker to provide you with a list of the carriers that were accessed in order to provide this proposal. That can satisfy the I need 3 quotes, because we can see the carriers that have responded. We can see the carriers that have declined. And with a very small number of carriers actually still in the marketplace, that list is short. So sometimes it's only one carrier that's actually providing us with an option. But use that market list rather than multiple brokers. Find the broker that specializes in HOAs that you're really comfortable with, and then use that market list as the proof that other carriers have been approached. Would you add anything to that, Terry?
I would add that if you do sign a broker of record letter, and that goes through, that means any work that the original broker did, any quotes that they got, all the work that they have already done is no longer theirs. That is being taken away from them and handed over to someone who hasn't done the work. So is there a time and place for that to happen? Sure. If you are working with someone who isn't responsive, if you've been reassigned to an agent that isn't getting back to you, isn't providing the paperwork, then sure, you can ask to be represented by a different broker. But when you're in the bidding process and someone's saying, well, I need you to sign this form to get a copy of your loss history, or in order for me to get any quotes at all, I think that's not plain fair. And there's enough work in this industry for all of us to have a slice of the pie. We don't need to be stepping on each other's toes. Yeah.
That was it.
All right,
That was
that's it. Actually, we're all done with our questions.
Very
Thank
good.
you, speakers. That was wonderful, and I hope all of our viewers gained additional knowledge about this subject. As always, please do not hesitate to reach out to us with your questions, and we'll see you next time.
Yep.
Bye.
Thanks.
Bye, everyone.